Welcome, everybody. Scott Riley, the Market Update Desk. It's December 7th. Do want to take just a moment and recognize this is the anniversary of Pearl Harbor and the loss of life that was there, the heroism that played out in it, and the sacrifices that were given on that day. So we do want to recognize that and pay homage to that. Today we kind of got a little bit going on, waiting with bated breath on tomorrow's all-important BLS jobs report. Today, stocks and bonds are both a little bit better to start the day. Mortgage bonds were lower initially, and stocks to start the day based on Bank of Japan came out and indicated that they were going to end the negative interest rate policy in the coming months. As a result, this did spike global yields across the board because so many of these central banks' policies and bonds are interconnected with the movements of other central banks. Initial job claims, this was the big one we were waiting on today. It came in and showed that initial claims rose by 1,000 to 220,000. This figure continues to remain somewhat muted, showing that employers are trying to hold on to their workers. Continuing claims. This is the big one that we watch each week now, as it has been very important. Those that are seeking continuing claims fell by 64,000 to 1.861 million. A little bit of a surprise there. While this came back a bit, it is still the second highest number over the last 2 years. Since this measure is delayed 2 weeks, though, it did encompass the Thanksgiving holiday and many times the seasonal adjustments that they use are a little bit out of whack. We will be seeing some continuing claims benefit expire. So we may have more concrete numbers next week when it comes out. But regardless, the figure has been raising sharply and points to a weakening labor market, and where it's much harder to find jobs once you're laid off because employers are slowing down hiring. Corelogic came out today, reported that Q3 equity increased by 6.8% year over year. The average loan to value for existing homeowners is now at 42%, which means homeowners have 58% equity in their homes, which is drastically different than the loan to value, which was 81% during the housing crisis. This is one of the reasons why we're not experiencing the same thing as what we did back in 07, 08. Negative equity decreased again by almost 8% year over year, with only 2% of mortgage properties having negative equity. It means real estate is still one of the best investments out there, and this is how generational wealth is created for the vast majority of Americans. The Manheim Used Car Index came out, shows used car prices declined by about 2.1% in November, and now are down 5.8% for the year. This is going to continue to help inflation within the CPI report. In addition, oil prices now got as low, WTI crude oil got as low as $69 a barrel yesterday. This also will help inflation because of the energy prices. Now, tomorrow we have this whale of data coming in, which is the Bureau of Labor and Statistics Jobless report, the BLS report. The estimates on the streets are expecting 180,000 jobs created and an unemployment rate to remain at 3.9%. In addition, also they are figuring in the average hourly earnings to decline from 4.1% to 4%. We think it's going to come in slightly weaker than what the street is expecting. Now, the bar has been set pretty high by these numbers, especially since the previous report showed 150,000 job creations and continued weakness in the labor market. Additionally, ADP report yesterday only showed 103,000 jobs created. Everything is pointing to a weaker jobs report, which we wouldn't be surprised to potentially see unemployment be 4%, potentially 4.2%. So we'll see how that goes. we have experienced a very, very healthy increase in mortgage-backed securities and a decline in the 10-year Treasury. We've had huge benefits the last 4 weeks with better mortgage pricing. Today, mortgage-backed securities are up again 9 basis points. 10-year Treasuries at 4.12 and on track to hit that next level of resistance at 4.02 to 4.04. Tomorrow's report is going to be really, really important. One of these variables that's within the BLS report, as we've also called the BS report, is what are they going to do with the birth-death ratio model, and will that impact the total report? So our report tomorrow is going to be a little bit later as we analyze this BLS report, get you the correct information. I wouldn't be surprised to see another pretty positive day in the market helping us in mortgage rates. So take advantage of these rates. Give us a call. Phone's been ringing a lot more. Don't be on the bottom end of this wave. Be on the crest of it for home buying. 616-293-2189. Give us a call. Ask some questions on the page here. Follow us on Facebook, Instagram, and YouTube. Take care. Have a great day.